and welcome back to another episode of Interpreting India. 2022 has so far been defined by yet another variant and wave of COVID-19, unprecedented geopolitical events that are likely to have far-reaching consequences, and a rapidly evolving technological landscape. This season, we at Carnegie India are examining many of the challenges and opportunities that India will need to confront in the coming decade. I'm your host, Priya, and this week, we will be taking a closer look at the use and impact of China's state-sponsored CBDC, the digital yuan. The digital yuan is a centralized cash-like digital currency. The People's Bank of China, which is the Chinese central bank, and digital yuan operating institutions, which include some of the largest state-owned banks, Chinese tech giants like Alibaba and Tencent, and even some MNCs, have conducted large-scale pilot programs in multiple cities within China over the last couple of years. The 2022 Winter Olympics hosted by Beijing in February this year was originally planned as the grand international debut for the digital yuan, focused on international athletes and thousands of tourists that were supposed to attend the games. Those plans, however, went sideways with yet another outbreak of COVID-19 pandemic. Under a zero-COVID policy aimed at halting any transmission of the virus, Beijing adopted a closed-loop system under which the 11,000 Olympic participants were sealed off from the general public. Of all the current CBDC pilots, it is perhaps fair to say that the digital yuan elicits significant interest given China's economic heft and geopolitical ambitions. In this episode of Interpreting India, we will delve into the debate surrounding China's digital yuan. Why did China introduce it? How does it work? What are its domestic and international implications? To discuss these questions, we have with us Robert Greene. Robert is a non-resident scholar in the Cyber Policy Initiative and Asia program at the Carnegie Endowment for International Peace. His research focuses on Chinese financial sector trends and on topics at the nexus of cyberspace governance, global finance, and national security. Robert has worked extensively on the global implications of China's central bank digital currency. Robert, welcome to Interpreting India. Delighted to have you with us.
Well, thanks.
Let's start at the very top for our listeners. Could you tell us a little bit about what exactly the digital yuan is and why is China pursuing it?
Yes. So the ECNY, or the digital yuan, has been an idea for many years amongst people at the PBOC. The history goes back to the mid 2010s, and now most recently in mid 2020 or early 2020, I should say, You had the piloting at first of several ECNY launches, right? And so that took place in a number of smaller, in a number of cities, I should say. And subsequently, you've seen the pilots expand to a broader range of cities. And now the PBOC is looking at a third round of pilots. So the most recent round of pilots was what was called 10+1. So it was 10 Chinese cities plus the Beijing Winter Olympics, and Beijing more broadly was the official way it was referred to as 10+1. And now the PBOC is looking at expanding that. So really, when we talk about the ECNY, it's important to keep in mind that it's a two-tier network. And so what that means is that there is a bank-to-bank element of it. And then there is also the retail side of it. And so effectively, individuals can open up wallets and have their digital renminbi in that wallet and use that to transact. But at the same time, if you think about it, right, as more and more individuals pay using digital renminbi, it increases the amount of digital renminbi in the system. And that by necessity, will lead to certain level of institutional transactions. And so I think as we step back and just think of CBDCs, ECNY, payments more broadly, there's an important distinction between the retail volume, the the consumer to business or consumer to consumer payments versus those business to business payments.
And why is China pursuing digital yuan? What are the drivers or what are the motivations?
Right. So there's a number of motivations. I think that's one of the reasons why I first started following this when I was living in Beijing, and it's a very it's a perfect example of where there's various policymakers who have different motivations who are supportive of the idea. So for one major motivation is a domestic focus, right? And it's that for quite some time, there's been concerns by individuals in the Chinese financial regulatory community about the power that large internet conglomerates have over the payments rails there. And while it is certainly the case that a large share of Chinese retail payments are still in cash, of the third-party payments providers, it's dominated by two very large firms, and that is why a number of folks at the PBOC have had concerns, because from their view, those internet conglomerates have not always been the most responsive to the regulatory expectations of folks at the PBOC. So that's one motivation. I think certainly there's another motivation that this has almost become somewhat of a, there's been a promise that this would be done. And so that then leads to a need to get it done. And it's become a self-reinforcing cycle. Then there's certainly also an element of this has been viewed as a means by which the renminbi-denominated cross-border payments can be conducted via a Beijing-based financial infrastructure. Now, that's certainly more of a medium-term goal. There has been pushback on that in the past of when the renminbi, the digital renminbi first came out. There was pushback on the idea that this had cross-border implications, but when the PBOC finally put out its ECNY white paper, it did make note of the fact that the ECNY is quote unquote ready for cross-border use. But that, of course, that fact is, of course, against the backdrop of Chinese capital controls, restrictions on cross-border renminbi usage more broadly, and other dynamics. So those are just some of the motivations. I think what's really been interesting to see is as we started with the smaller pilots in 2020, and now it's 2022. It's really interesting to see how the range of institutions that have been involved in the ECNY network and how that continues to grow. So yeah.
Thanks for that, Robert, because, the next question was to ask you, if you could give us a sense of where China has reached in its goal to formally launch the digital yuan for both domestic and cross-border use. I'd mentioned at the introduction to the session that, there was this expectation of a grand debut of the digital yuan at the Winter Olympics, which was perhaps stymied due to the, another outbreak of COVID-19 pandemic. But PBOC officials in recent statements have claimed that an equivalent of $315,000 have been transacted in digital yuan every day at the Olympics. So, how significant is this? And where do you think China is in its goal to formally launch the digital yuan?
Yeah, it's important to put those numbers in perspective. I mean, as a share of the transaction volume that's currently conducted via Alipay or WeChat Pay, the digital renminbi's payments flow is actually quite small. So it's we're talking about big numbers here, and so even though that's it is an objectively large number that has payments that have gone through the digital renminbi payments network, it's a very small number when compared to the amount of payments flow that's gone through the large third-party payments providers. I think another thing to also bear in mind is that the ECNY thus far remains a fairly urban phenomenon, and in China, rural areas account for about 40% of the population. And the banking relationships that people in rural areas have versus people in urban areas are quite different. And so you again, going back to that 10+1 concept where the pilots have been thus far, it concentrates on urban centers. And so I think one of the big things to watch, and from if we're just only looking at the ECNY from a China inward perspective, is how will Chinese policymakers roll out this payments network in rural areas? Again, keeping in mind that there's a large share of Chinese retail payments that are still in cash.
So, what do you think are the challenges or impediments? You mentioned one in terms of the large internet conglomerates. They are the incumbents, and also the rural areas where there are embedded relationships already with the banking sector. The reason I ask this question is India is also looking to introduce its own CBDC, and one of the questions that has come up is what specific advantages does an Indian CBDC have? Or offer, given that we have a vibrant payments ecosystem that exists here already. So, your thoughts on what steps do you think China will take to increase the wider adoption of digital yuan, and what might be the challenges besides the two that you have mentioned, if there are any?
Yeah, so I mean, it's a really interesting. There's a lot of debate in Beijing about this. The pace with which the digital renminbi would be distributed nationwide, how it would be distributed nationwide. I'll make a few notes. I think, first of all, I'll caveat everything with saying, China's approach here, there's certainly, it's worth watching, and perhaps there are certain lessons to be learned. But I think each country's circumstances and each country's, internal political dynamics are different here. But that having been said, I think one of the, as I was alluding to earlier, I think one of the biggest question marks is simply, a lot of people in rural China, I think it's, 40% of its rural population primarily bank with one of the thousands of rural financial institutions or city commercial banks out there in China. And, those institutions are distinct, right, from the big, large state-owned banks that have up to now been more, thought of as being associated with the ECNY. So one of the questions is, let's suppose I am living in rural China and I have an account at a rural credit cooperative, and that rural credit cooperative, right, has, relatively small. And then all of a sudden, this ECNY, and I primarily, in my day to day, I'm using cash to transact. So the ECNY is rolled out. The question becomes, why would I switch to using that? I think we often think of ECNY through a policy lens. It's important to also think through just like with any product, what's the business case for ECNY if I'm from the user's perspective, right? So what does the user get that they don't get from a cash transaction in that concept? Because I think we often think about the ECNY as a competitor to the large third-party payment providers, but at the same time, it's going to be I think a lot of its uptake in rural areas will depend on why one would use it instead of using cash. And I think that's where policymakers really have to make a choice, and it's also as applicable to third-party payments providers. Competition angle is, what levers will policymakers be willing to pay to incentivize to pull levers they're willing to pull in order to incentivize use of ECNY? And there's a number of options, right? There could be, discounts on certain goods and services. There could be, making sure that merchant fees are lower for ECNY transactions. That's not applicable to cash, but that would be applicable in the third-party payments providers context. And so that is an open question. And I think, and then another open question is for those people in rural areas who are banked primarily by the rural credit cooperatives or smaller financial institutions, what exactly does the on-ramp, off-ramp look like between money in your ECNY wallet on your mobile device and money in your account at your small financial institution? And there's been incremental work done towards kind of thinking that through. And it wouldn't surprise me in the least if this new round of pilots by Chinese authorities start to explore how exactly, in greater detail. Again, it's been explored somewhat, but start to explore in greater detail how exactly those relationships will work, and with an eye towards a scalable way in which people in rural areas can get ECNY. I'll just add another concern there, right? Though is let's suppose that some of these smaller financial institutions have troubles, right? I mean, these are there's been a number of smaller, mid-sized financial institutions in China that have had issues. So, in the event of a banking crisis or at one of these institutions, or what, then there is this question as to, well, would the ability to just get on one's phone and withdraw money from your rural credit cooperative into your ECNY wallet, is that actually going to increase fragility in the Chinese banking system? And so I think that is certainly a concern that policymakers are weighing. One way that they would address that is have caps on withdrawal limits. But then, so you can go down this rabbit hole of kind of continuing to think about the trade-offs of all these various choices that have to be made. And I think that the kind of stepping back, the bigger point to make is just there's a lot of choices that need to be made in terms of the structure of the ECNY network for it to eventually proliferate and in the eyes of Chinese policymakers be a success. And so those are, since this is a quite a top-down system, those decisions need to be made at the PBOC. And I think we can expect those to, increasingly as pilots grow, to be, those decisions to be made more clear.
Right. Like you said, this is a space to watch. And I'm glad you brought up the reference to cash. Because I wanted to sort of dive deeper into one specific aspect, which is, the concept of controllable or controlled anonymity, which has been associated with the digital yuan. Can you tell us a little bit about what that means and what its implications are to consumers and businesses operating in China? And do you think this is or has been an impediment to widespread adoption, or likely to be?
Yeah, so I'll speak at first to what is meant by that term. I think it's important to cast the ECNY against this broader concept in China of quote unquote by authorities for quote unquote financial security. And one element of this what's called financial security is the fusion of efforts by state security organs and financial regulators to detect what is perceived to be financial crime, right? And in some cases, that is that in some cases that's capital control avoidance. In other cases, that's issues with regards to sufficient amount of taxes being paid, et cetera. And so I think one of the ways in which, looking at the ECNY, another, again, against the broader backdrop of other policy efforts in China, again, I think that the ECNY represents it came into existence because a number of policymakers saw benefits to this and wanted to pilot it and experiment with what, one of the things we've heard discussed is, the CCP's Central Commission for Discipline Inspection and State Supervision Commission. They've put out, a commentary saying that the, ECNY network structure will give the state greater ability to control and monitor financial flows. So I think that when we're thinking about controllable anonymity, what that effectively entails is that ultimately the payments flows are, rather than the authorities having to go to one of the large third-party payments providers for information on particular payments flow, or in order to get information about a certain person they deem suspicious, a certain transaction they deem suspicious, that information is at the PBOC, and the PBOC would presumably apply analytics capacities in real time to monitor for what is suspicious transactions. And so they're Yeah, I mean, I think ultimately this all plays into why there are, I think certain people, there's certainly consumers in China who I think are worried about the privacy element here, but I think there is a recognition that it's not as if using one of the existing third-party payment providers is a privacy protecting thing to do, right? I mean, it really boils down to who do you want to have your data, and interestingly enough, some of the rhetoric around ECNY in China has almost cast the the ECNY again in the eyes of certain commentators as a more desirable alternative from looking at payments protected from the privacy lens. And so that's been a very interesting thing to see. But it certainly is a case, going back to something I was saying earlier, that the one of the motivations is this tension that has existed between regulators and those third-party payment providers with regards to the ability to access data that authorities want.
But you did mention also that there is large cash usage. Cash, of course, is anonymous. So do you think the Chinese government will find it difficult to sort of persuade that section of the society to move to digital yuan?
Yeah, so I think that is interestingly an area where there is public debate. I mean, one of what I have found quite notable to see from the retail consumer-oriented side of things in China with regards to ECNY is that there are some who actually are very vocal about how they're very concerned about how there's an increasing propensity for certain stores, right, to not accept cash. And there was this one video that went viral not too long ago where an elderly gentleman was trying to use cash to transact at a store, and he wasn't able to. And there have been a number of statements that authorities have put out saying, "Look, cash is still legal tender in China. There has to be an acceptance of cash." And I think Chinese authorities are wary of the fact that such a large share of transactions are in cash that this isn't necessary. That is not something that needs to be. That's not so much that's not viewed as so much as the policy problem that ECNY is trying to solve. I don't think that Chinese authorities view that as so much as the policy problem. I mean, in some contexts, certainly. To a certain extent, that is viewed as something that would that can facilitate financial crime. However, that is not I think the main motivation here, at least from the domestic context. I think that it's more about the third-party payment providers.
And is the concept of controllable anonymity different from how other countries like the United States, for example, are viewing or discussing questions around anonymity and privacy of CBDC transactions?
Yeah, so I think it's difficult to draw parallels between the Chinese discussion about controllable anonymity and those of countries such as the United States or other frankly countries where there are greater privacy protections more broadly. I think, and more of a rule of law, I should say. I think that where it is, to drill down a bit more on the controllable anonymity concept. I mean, in a 2019 speech, Xi Jinping talked about the need for control. Again, this concept of financial security, the need for controlling people, watching money, tightening the system firewall. There's been a lot of talk, I think, just about the need to have a better sense domestically of how money is flowing through these third-party payment providers. I've been drawing that contrast a lot. I should be more clear. I mean, this is one of the things that Chinese policymakers seem to have gone back and forth on over the last few years as they conceptualize ECNY was what's the role that the third-party payment providers are going to have with regards to the ECNY network. And the compromise that looks that at least now has been reached is that those third-party payment providers, their bank affiliates, are participants in the ECNY network, and that eventually one will be able to use those systems to conduct ECNY payments. However, the kind of back end, what that looks like on the back end, is going to be fundamentally different because rather than the payments infrastructure being housed in a internet conglomerate, it's actually the back end infrastructure is state run.
The next question I have is, and this has been again bandied about as well. China seems to be in a fairly advanced stage of its pilots for digital yuan. Does it give China a first mover advantage, especially in terms of setting global standards? Because we've seen some of the largest central banks, including the Fed, announce, I think it was last year or the year before, foundational principles that must govern issuance of a CBDC. But we haven't yet seen a lot of traction on a digital dollar. So two questions. One, is there a first mover advantage to China? And two, do you see the fact that, some of the larger central banks like the Fed not gaining a lot of traction on digital dollar as a problem?
Yeah, so let's start with the first question of the standard setting question. I mean, here is where I think we have to then start to kind of think about CBDC in two lights. One is the retail transaction side of things, and the other is the cross-border payments, wholesale, large value commercial payments side of things. So I think to the extent that another country wants to import this idea of controllable anonymity and has circumstances quite similar to China, one could see how in those set of circumstances, the ECNY would, that model could be something that would be desirable. But I think that in most cases, the idea that the PBOC is going to be a standard setter, I think where that's most relevant is actually in the wholesale context, in the cross-border payments context. So in particular, the multi-CBDC arrangement that the PBOC is working on with Bank of Thailand and Hong Kong Monetary Authority, UAE's Monetary Authority. In that context, interestingly enough, the PBOC is in charge of the technology committee. And these multi-CBDC arrangements are interesting because fundamentally what these entail is the ability of CBDCs to be used in cross-border contexts because there's a kind of common governance agreement between monetary authorities as to kind of how foreign exchange transactions, cross-border payment flows that involve at some point the transfer of one currency into another currency. There are these arrangements whereby that's agreed upon with the goal of reducing reliance on existing financial infrastructure and basically allowing central banks and regions where right now there's a high reliance on dollar denominated payments to enable those jurisdictions to reduce that usage. If that's not a stated goal, it's an implicit outcome. And yeah, so I think that the PBOC's involvement in those efforts is very important to watch. And that's, then to your point on kind of the Fed and what about a digital dollar? I mean, look, I think the U.S. is, the U.S. The amount of people in the U.S. who are banked, the amount of people in the U.S. with internet access, there's so many different things about the U.S.'s financial system relative to China that, at least from the retail CBDC angle, there's been back of the envelope calculations out there about the need for a retail CBDC that indicate that indicate that if to the extent that policymakers are trying to increase financial inclusion in the U.S., these estimates are asking whether if rolling out a CBDC domestically is the appropriate solution there. But in the wholesale context, in the cross-border payments context, I think where we're increasingly going to see policy debates and questions as to what happens next is this idea of what systems, what infrastructure are going to facilitate cross-border payments flows, and will it continue to be the existing SWIFT infrastructure, the existing large value payment systems that are that facilitate dollar flows, or will we see certain countries, particularly in East and Southeast Asia, roll out infrastructure that aims to create alternatives, and how will the U.S. and other policymakers globally respond to those efforts?
And should that happen, if you do see the emergence of an alternative payment ecosystem, as you just mentioned, would a digital dollar be part of the plan or arsenal that US would be looking at? Is it necessary? Is I think what I'm trying to understand.
Well, it could be. I mean, I think any digital dollar, the devil's in the details, right? I think I think policymakers in the U.S. will increasingly, especially given the ongoing events related to Russia's invasion of Ukraine and how this has all really illustrated the geopolitical advantages that the U.S. derives from having the power to use really strong sanctions, having that power in its toolkit and its policymaking toolkit. I think this all underscores the kind of the need to think through. Okay, well, there's very clearly efforts afoot to reduce the U.S.'s ability to use that power. Now, reasonable people can disagree as to how successful China will be at developing cross-border payment off ramps from the U.S. dollar, the U.S. Cross-border payments infrastructure. So there's definitely reasonable people can disagree there. I think without a doubt, though, there's a very clear intention to develop alternatives, and that's you've seen that just in the last few days in light of 7 Russian institutions being disconnected from SWIFT. And the U.S. implementing sanctions on certain Russian banks, even though there are, energy-related transaction exemptions to those sanctions. The commentary in China has very much of it, I should say, has particularly from certain state-owned financial institutions, researchers at those institutions, has really spoke to fears that exist in China that one day those sanctions could be used, in a greater way, in a circumstance involving China, and also have spoken to just a broader desire of China to have those, to have off ramps.
I want to stay on that a little bit. So there were reports that at the Winter Olympics, a majority of the foreign athletes preferred to make payments through Visa cards rather than use digital yuan. This seems to sort of reflect some amount of mistrust of the Chinese technology, especially, perhaps when it comes to data privacy and regulatory scrutiny. So the question is, to what extent do you think such mistrust affects the growth of China's digital yuan internationally?
I think it certainly does, right? And I mean that's an important thing to watch. I mean that's certainly one element of all this, and the other element, of course, being kind of just cost and the business case for using one payments channel versus another, right? So, I mean, there is, like, so take for example what happened last year with regards to new sanctions against the Burmese military government and people involved in that. China's state-owned bank affiliate in Yangon basically. The Chinese state media mouthpiece put out, an explanation of that the Chinese state-owned financial institution and is going to start to allow increased ability of Burmese businesses to have accounts at a Chinese state-owned bank, and that in turn is going to allow certain U.S. sanctions to be avoided. Similarly. In September 2021, after the Shanghai Cooperation Organization was accelerating its efforts to increase local settlement, commentators again in Chinese state media outlets made the point that this use of local currencies can help bypass potential U.S. sanctions, and so I think. I bring that all up in the context as one driver for increased local settlement usage will, I think, certainly in China's eyes, be the ability to go to countries or organizations that are fearful of U.S. implementing sanctions and saying, look, this is an off-ramp. However, to your point, then, and this is something that one of our Carnegie colleagues said the other day is that what this China's also, I think, looking at the U.S.'s toolkit, its financial sanctions toolkit is quite envious of those tools itself, and I think certainly policymakers in Beijing would like to have that ability down the road. So one of the questions, I think you nailed it with that question, is to what extent certain countries in the region are willing to use the renminbi as a vehicle currency or as a payments currency for large value payments. I would say, though, then then this leads to a question of what policy levers, again, similar to the retail payments discussion, what policy levers is Beijing willing to pull through state-owned financial institutions to really make the economics of using the digital renminbi, or for that matter, other renminbi-denominated payments channels for cross-border context? What levers is it willing to pull to increase the desirability of that from a cost structure perspective? And I think that will be something to watch, right? Because, and this would then play into just basically a trade-off that China's trading partners would have to make, which is, to what if China if it gets to the point where Beijing is heavily incentivizing certain trading partners to use the renminbi as a payments instrument, then that would be quite notable. I'll just caveat all that with saying, one thing that people always note is, well, China has strict capital controls, and it does. I think what's important, though, is already a decent share of Chinese exports and imports are invoiced in renminbi. It's certainly not inconsistent with China's 5-year plan, Beijing 5-year plan of steadily and prudently internationalizing the RMB for an increasing share of imports and exports to be denominated in renminbi. So we can see that it's certainly plausible to imagine a situation where Beijing-based payments infrastructure is increasingly used for that share of transactions that's renminbi denominated already. That not being that is certainly consistent with the kind of current policy trajectory with regards to renminbi internationalization. So we're not talking about the RMB becoming a global currency overnight. I think what we're talking about is a desire, at least by certain people at the PBOC, to turn the renminbi into a regional currency that's much more popular with regards to invoicing and exports and imports involving China.
You have, I think, in the recent past mentioned that Beijing's CBDC efforts could spur the proliferation of a new cross-border payments infrastructure, which could undermine U.S. interests. More recently, you've suggested that the recent events in Ukraine are likely to change the geopolitical landscape of cross-border payments and also accelerate Beijing's digital Yuan plans. What I wanted to ask is if you could please expand on what this alternative cross-border payments infrastructure comprises of, and how integral a role is the digital yuan expected to play within? And the reason I ask is that, you mentioned how, transacting with sanctioned countries could be one pathway for China to push the use of the increased use of digital yuan. But China has had transactions with sanctioned countries in the past before, the digital yuan has come into play. It isn't in play today. So what I'm trying to understand is what advantage or what improvement does the digital yuan provide within this ecosystem, cross-border payment ecosystem or infrastructure ecosystem that China is building?
Yeah, so that's a fantastic question. And I think it really gets to the heart of the matter, right? So there are, I think the short way of answering that is that Beijing currently is exploring a number of cross-border payment channel ideas that each of which aims in one way or another to give Beijing greater control over the financial infrastructure used to conduct cross-border payments. Now, some of those strategies are kind of more longer term and are going to, let's say, don't necessarily have the same likelihood of success as other strategies, right? And so, kind of thinking of some of them more as a, high impact, low probability of success, and some of them are higher impact of success, lower impact. But I think across the board, the broader rhetoric, the broader tone of a lot of individuals, not all, I should definitely caveat with saying not all, but a lot of individuals in Beijing's kind of financial services policymaking community, and again, individuals at some of the state-owned financial institutions, a lot of the rhetoric is around this need for alternatives. And to more now dive deeper into your question, by no means is the digital renminbi the only off ramp that China is contemplating. And I would actually go as far to say that I think the way in which the digital renminbi would most likely, I think, become an effective off ramp would by necessity. I mean, it would by necessity involve kind of the ability to communicate with other, financial institutions outside of China. And so that's where I think the multi-CBDC arrangement that China is contemplating would be an illustrative example of something that involves CBDCs and would advance these goals of achieving alternative payments channels. But there again, it's the governance channels, the governance challenges with a multi-CBDC arrangement are significant. So then I think that's what causes China to then think, some in Beijing to think about, well, okay, what are some of the alternatives? And so there's been a lot of talk recently about the CIPS, this alternative payments rail, and that the alternative payments messaging system that China has, and how it currently relies a lot on SWIFT, though. And so what about then there's an effort to eventually have CIPS not rely on SWIFT as much. So that's another example. So, and then there's the whole network of state-owned bank affiliates, and how the state-owned bank affiliates could be means by which China is able to facilitate increased renminbi-denominated transactions without relying on either, SWIFT or on, and just only relying really on its homegrown financial infrastructure. That, of course, necessitates that there's increased banking relationships overseas with those state-owned bank affiliates. So that's another avenue. And then, to that end, you've seen, just recently, you saw Gang, the head of the PBOC, pledge Beijing support for increased local currency settlement in Asia at the February 2022 G20 finance ministers central bank governors meeting. So I think there's various gradations, various approaches that Beijing is contemplating to increase renminbi denominated settlement activity. Certainly not the case that the digital renminbi will be the first out of the gate. I think it's part of a broader, strategic vision by some in Beijing to build out alternative payments channels.
Why do you think such an alternative payments infrastructure, which is renminbi denominated, could pose a real challenge to the dollar-dominated system. Could you sort of maybe dwell a little bit on the security implications that it could pose to US as well as other countries, say like India?
Yeah, well, I think it's all very we're very early in this, and so it's difficult to I think it's difficult to project where all this is going to go in the very long term. I do think one thing I would feel confident saying is that events of the last few weeks, we're recording this on March 7th. I think events of the last few weeks have at least accelerated Beijing's desire to build out this alternative payments infrastructure. A lot, to that the question you asked previously, a lot of this hinges on the trust that other central banks and other market participants are going to place in Beijing, and also a lot of this decision tree is based also on market circumstances and the desirability of using other payments channels and what steps that the U.S. and EU are going to take to increase the desirability of the dollar and the euro as payments and invoicing currencies. And there's plenty of things that can be done to increase the desire of the dollar and euro as invoicing currencies that don't relate to CBDC. And I think policymakers in both the U.S. and in Brussels are aware of these and are just it's a different policymaking approach in Brussels and Washington as it is in Beijing. And so I just because there hasn't been action yet doesn't I wouldn't even go as far as to say there hasn't been action yet, just because steps towards this end of improving cross-border payments infrastructure in the U.S. and Brussels have been it's a very deliberate process. Just because it's proceeding that way, I don't think that necessarily means in the long term there won't be significant steps taken. I think policymakers, especially again, and given the events of the last few weeks, increasingly understand the importance of cross-border payments, and particularly in the wholesale business-to-business context.
And earlier you mentioned that it's certainly plausible that we will see an alternative renminbi denominated payment systems in the near future. But how plausible is it? Because arguably, given the recent financial sanctions package, a couple of which have actually been discussed as the financial nuclear option against Russia, is also likely to spur other countries to think about and begin to develop maybe their own independent alternatives, which perhaps are not amenable to either the dollar or the renminbi domination. So how do you see the CBDC landscape developing? Is it going to be dominated by two models, dominated by the dollar or renminbi, or are you going to see a lot of fragmentation? Or is it too early to sort of talk about it?
Well, I do think, it certainly is early, but I do think this is the question you're asking to speaks to Beijing's interest in multi-CBDC arrangements, because I think fundamentally, there's a lot of rhetoric in Southeast Asia about an interest in increasing local currency settlement. Fundamentally, what that necessitates is more efficient and lower cost foreign exchange transactions involving local currencies. And so I think at the end of the day, what matters is the cost structure of a cross-border payment, right? So the sanctions avoidance and those issues are certainly, if you're blocked from one transaction channel, that changes your cost calculus. But putting that aside, if we're just competing on what payments channel a commercial entity is going to select to transact with another commercial entity, it really boils down to cost, and that really boils down to are there any steps that policymakers are taking to make that particular payments channel more desirable? And one thing that some in Beijing have talked about is the idea of the renminbi becoming this regional currency that's used for invoicing across Southeast Asia. and that ultimately the foreign exchange costs of the renminbi relative to Southeast Asian local currencies would be significantly lower than today. That we'll have to see whether those policy outcomes are achieved. But as it stands now, at least, I think when you look at the source of why the U.S. dollar is used as a payments instrument so broadly, I mean, one is as we've alluded to, is the rule of law and trust in the U.S. system. Also, it's the cost structure, right? It's a highly liquid currency. The vast majority of FX transactions involve the dollar on one side of the trade, and liquidity begets more liquidity, right? And so that it becomes self-reinforcing. And so that I do think, to the extent that policymakers in Beijing are trying to chip away at that, it will be a challenge, and I think they realize that. So it's going to be very interesting to watch what type of initiatives are accelerated and how exactly Beijing plans to address those market dynamics.
Robert, thank you so much for joining us today and for this enlightening discussion on the implications of China's digital yuan.
Thanks.
We'll be back in 2 weeks with a new episode. To make sure you don't miss it, be sure to subscribe on Apple Podcasts, Spotify, Stitcher, or wherever you get your podcasts. To learn more about our research and team, you can visit us at carnegieindia.org. You can also find us on social media on Twitter, Facebook, and Instagram. Thank you for listening, and see you next time.